All right, folks, another week, another What the F happened. And there's plenty of stuff happening out there, folks. And that's exactly what Stephen and I are going to cover in today's episode of What the F, because there's all sorts of what the Fs. I mean, whether it's Trump or Biden or the Magnificent Seven stocks, which are making new highs and the markets are going to the moon or not. Are we going to be in a recession in 2024? Are we not? Is real estate going to go up or is it not? These are the topics. What is a lagging indicator? What is a leading indicator? What should you be looking at? Because it's so noisy out there. There's so much manipulation, so much speculation. Does anyone even know what to do right now other than just close their eyes, go to work, and wonder why they do what they do? That's what we're going to cover in today's episode of What the F Happened. We'll be right back after this. All right, we are back and live for another week of What the F Happened as we kind of get through this awesome January where it's been winter storms, and Hail Marys from Josh Allen, which cost the game. Or was it the kick that went wide right that cost the game? We're not here to talk about football, but you got to kind of sometimes talk about the Hail Marys and the long passes for the hope and pray, because that's what a lot of people are doing with their retirement dollars, their investment dollars, a lot of hoping and praying, and that is not a good strategy. Stephen is joined here with us along with Mr. Lazy Cash, which some of you can see the little kitty cat back here. There's the tail, but TikTok and Instagram, you guys can't because he's kind of just leaning up against you, but he is here for the show, here to take part in this, and we'll see if he's got any good advice outside of don't keep your cash sitting around lazy. Stephen, what's happening down there in Florida?
Hey, good morning. Just hanging out really this morning, listening to a little Tony Robbins interview. Actually, he was on Tucker Carlson on X, and I was listening through that this morning. It's really interesting to hear Tony Robbins talk all about what you and I talk about every day, Chris. Just the importance of, being able to put some money away and invest that money in the right places, and the differences of riding the stock market up and down throughout time versus getting into things like private equity and private real estate transactions and taking advantage of being able to buy into partial ownership of different syndication type deals, and just the difference that makes over a lifetime, and being able to get started, young and compounding over the years. And so it's really cool to hear kind of somebody like on Tony Robbins' level, just repeating. And then he got a lot into the economy and what's going on right now. Chris, how we always talk about how there's it's everything's circular. So we go through hard times, like Stephen Nagy says, the hard times create weak men and weak men create good times, and the whole cycle of everything. And Tony went on to kind of look at it as seasons, where right now we're like in the winter season where everything's hard and everything's getting tough, and there's going to be tougher times ahead. But then after winter comes spring, where everything starts popping out again and coming back, and life comes back out of the snow. And he feels like that's kind of where we are right now. And we talk about that all the time, Chris. Now, right now is the time to preserve wealth. Just the importance of it's not always about growth, but it's about preserving that wealth and having the right education to take advantage of opportunities as they arise. So as you know, that's what this show is all about, is talking about where are we today, what's going on with the economy, so we can prepare and plan for our money for the future. So just kind of excited this morning to kind of hear some of that. And I like to start my days off by listening to something positive, usually about 30 minutes. Today I went a little bit longer to finish that, but just a beautiful Wednesday morning here in South Florida overall.
I love it. And I can relate. Every morning, I get up real early. I get up about 5 a.m. to go to the gym before Vivi goes to school. And, I start my morning every morning with an Earl Nightingale messaging. He's got a lot of broadcasts. And, I did, I'm on day number 40 of The Strangest Secret in the World, but now I've kind of been diving into other things that he does. And it's just all about the mind. It's all about, what you plant in your mind and the ideas. And if you're just going through life without a purpose, without a goal, without a reason, and you're just conforming to what everybody else says, kind of like what Tony always says, you don't want to conform, you want to create. That's the ultimate. Success is simple. It's just you have a worthy idea that you pursue on a day in and day out basis, and it consumes you, and that idea becomes your life. Like you literally can think it into reality. Now, a lot of people on here are probably like, oh, that's foo-foo stuff. Let's get back to the news. Okay, we'll get back to the news, but like when we go into the news, think about Netflix. Top line news today. Netflix shares pop 10% as streamer adds 13.1 million subscribers and tops revenue estimates. I don't know whether that's important news or not important news, but someone, some point in time in the past, had a worthy idea to stream movies. That was called Netflix. I actually read the book that was written by the HR director who was really good friends with the founder of Netflix. And they talk all about it. I can't remember the name of the book, but I'll find it. And in that book, they just talk all about this idea that they had for Netflix and where it started. And some of you aren't old enough to remember, but Netflix used to be, when you walked to the grocery store, there was a little red box and there was DVDs in it. And you would basically kind of either have a membership or you'd just put your credit card in and you'd rent a movie. That was Netflix. And now look what it is, 13.1 million new subscribers and going strong. So when you look at it, like that was a worthy idea. That person that had that idea never gave up on that one change, that one thing. So what is the idea that you have every single day? Or do you know why you get up and go to work? So when all of you are waking up in the morning, whether it's 5 a.m. or noon, it doesn't matter. And you look in the mirror, like, why do you do what you do every single day? These are worthy questions you should be asking yourself. And I think when you look at the news and you look at the markets and you look at Donald Trump or Joe Biden or any of the other Haley or any of the other, people running for presidency in 2024, like they all have a worthy idea. What is the idea? What drives them? Why do they get up every single day? I mean, I got a question. I mean, does Joe Biden even know he woke up? That's my only question on that one. But hey, let's dive into some of the news, because there is some interesting things going on right now. Stephen, where should we start?
Yeah, it's a good question. I mean, when you talk about Netflix, my question is maybe it's a good time right now to invest in baby products. Things like diapers and things babies need. Because what do the kids say these days? The kids say Netflix and chill, which I don't know if you know what that means, but it means a little bit of hooking up going on. So we've got a lot of 13 million new users on Netflix and chilling. Maybe we've got some babies coming up in the next year. I don't know, Chris.
Wow, that wouldn't be such a bad thing. I mean, hey, listen, in the United States, we're doing a little better than the other countries like China and Japan, where they're literally aging out of their population, their working force population. Japan's got a major issue. Their workforce is getting old. And their new workforce isn't enough to support the workforce that's aging out or retiring out. Same thing's going on in China. China, had a point where they didn't let their citizens or their women have more than one child. I mean, I remember that. I remember like you could only have one child. And that hurt them because they're growing so fast. They need population in order to support a growing economy. They don't have it. It's one of the biggest problems right now with China for the future of China. China simply cannot maintain its growth that it has seen in the last, decade or 2 decades because of simply population. They don't have the workers to support the growth. And that gets into geopolitics and everything else. But when you really think about like what's going on with Netflix and chill and 13.1 million, maybe some of the Netflix and chilling will result in new babies and new population growth here in this country, because this country's not too far off. We have a lot of, the gray tsunami, right? They call it the baby boomers and the silent generation, the retiring out. Most of the silent generation is kind of already gone. The pandemic kind of really did a good job of pushing them into retirement or just kind of making that decision. Hey, I'm going to be done. I'm not dealing with this anymore. But baby boomers are definitely largely still in the workforce and largely still driving productivity growth in this country. And then you got millennials, my generation, Gen X, Gen Z, and all them. But there's just not enough of them to support what is retiring out. So I hope Netflix and chill produces the next wave of diaper demand.
There we go. Yeah, I mean, so, there's obviously a lot always in the news. I mean, one story I've kind of been following just because how much we fly, Chris, is Boeing and what
Yeah.
they're doing with some of the airplanes. I mean, Boeing's an interesting company, when you look at it from a macro level, they, have always been, one of the largest suppliers of obviously airplanes. They do a lot with the military and, it's interesting to watch their stock because it's been so high in the past and it keeps getting hit after hit after hit behind it. But it's one of the most, one of the major American companies in this country. I mean, what do you think about what's going on with Boeing right now?
Well,
Do you have
they
any
had
thoughts on
problems
it?
with those 737s early on. If you remember, a couple crashed and they got them fixed. And then, I mean, this last one, I mean, a door just flies off. I mean, obviously the stock is represented, is building in what's going on with with Boeing. I mean, there's some concerns. I mean, for people that travel, I mean, listen, like the whole last couple of years, and Ocean 888 did correct me. Thank you. Let me pause real quick. Ocean 888 corrected me. He is correct. He's thinking Redbox. And I did confuse Netflix and Redbox because they were both kind of the same era. One was the subscription one. You're absolutely correct. But Netflix also had those boxes, if you really look back. But you're right. Thank you for correcting me. That was Redbox that we saw at the grocery stores. But Netflix was a subscription where they were mailing DVDs, but you could also deposit or turn them in at things like CVS and Walgreens. So thanks for the correction. But anyway, back to Boeing.
That's really fun too, like getting the mail and having DVDs in there. Like I remember that.
Yeah,
That was
that was
actually a lot of
cool. Oh, I thought it was awesome, man. You went on and you picked your movie you're going to watch. It came and then you just dropped it back in the mail. It was super sweet. I miss some of those times. I miss CDs. Hell, I miss cassette tapes. And some of you probably miss your Super 8s. But Boeing. I don't know, man. This is a big one, and until they can really kind of put the
Look at this, an
finger on the
hour ago,
problem.
Boeing 757 loses wheel before Delta flight takes off. Like that,
What? Now the
Alaska
wheels are
Airlines
falling
CEO
off? Shit.
company found loose bolts on mini MAX 9s. United puts, not that anybody's flying United right now, but United puts Boeing on notice. It's looking at other jets.
Well, that's definitely not good for Boeing. But you know what? I guess strike one, strike two, strike three. Like you're out. Like that's how baseball works. Like with Boeing, you got two big strikes against the 737s, and now you got wheels falling off the damn planes. And I love Delta. That's my favorite airline. So I guess you could really kind of chalk that one up and you could say, is Boeing going to be a bargain? Can you buy it at a discount now? Do you think they're going to make it through? Or would you beware on buying Boeing stock? I don't know. I don't really have the take on that one. I would say Boeing's probably a pretty stable company, but this is a pretty big one that they got to overcome. But I think in the long run, we'll forget about wheels falling off and doors flying out, and we'll probably see Boeing, go back up again when everybody starts traveling, for summer and all the vacationing. So I don't know. I think it's probably more of a bargain than it is a bust. What do you think, Stephen?
Yeah. It's an interesting story. Definitely keep an eye on.
Definitely an interesting story. And the other thing too that I think is interesting, and I want to talk a little bit about this, and I did this intentionally where we were talking about Netflix and 13.1 million and how they're up 10% and the markets are actually positive today, 140 positive on the Dow and 25 positive on the S&P futures right now, and largely because of the Magnificent Seven, and we'll include Netflix in today's news. But I want you to all understand something. Like when the news pops, when you see that in the headlines, you have to understand something. That pricing is already built into the stock price. So if someone rushes out and buys Netflix today thinking, oh my God, this is going to be a great stock, look at all the new, you already missed it. You already missed it. You probably should just be following all of our congressmen and women and just seeing what they've been buying because they got the inside scoop. That's the best inside traders there are. The best stock pickers there are Congress. I mean, forget about Wall Street pundits, forget about the hedge funds, forget about all these Harvard and Yale grads coming out that are supposed to be the best of the best for Wall Street. Like all you need to do is follow Congress. What are they buying? I bet you any money they bought Netflix weeks ago. And now they're probably unloading Netflix, taking their profits off the table. But you got to understand when news hits and a stock pops, it's already over. You've missed it. So if you get into it, the downside is probably better than the upside. And Deutsche Bank is you've heard of Deutsche Bank, but just today they downgraded Netflix. They say that all the good news is already priced into the stock. So let's take that one layer deeper, because this is all in the news. I'm just trying to kind of take news articles and just kind of expand on them. So let's take the Magnificent Seven. So if any of you haven't been paying attention, what is the Magnificent Seven stocks? Well, they're tech stocks, okay? There's 500 stocks inside the S&P 500, which that's why it's called the S&P 500, Standard & Poor's 500 stocks. Now, out of those 500 stocks, the S&P 500 is largely positive because of 7 stocks. And I'll list them. Alphabet, we know it to be Google, Amazon, Apple, Meta or Facebook, Microsoft, NVIDIA, and Tesla. Those stocks are driving the S&P 500. And if we looked at the returns on those, it's basically collectively, they've gone up more than 110%. If we were to remove one or all of those 7 from the S&P 500, and I don't know this to be fact, but back a little while ago, it would have meant a negative return in the S&P 500. That's how severe of a swing these 7 stocks are having on the overall. Stephen, you got a chart there. You want to explain that real quick?
Yeah, well, this is looking at kind of from the other point of view of since stocks were at their lowest point back in October of 2022, a little less than a year and a half ago, just what the S&P and the Magnificent Seven have done. So since stocks were at their lowest point back in October of 2022, they've been up a little over right around 65%. And when you take the other 493 stocks in the S&P 500, about 25%. So they're, almost triple. They've almost tripled, what the rest of the market's done, just to give you an idea. And if you take this back even further, you're absolutely right that the other 493 would be a negative if we were to look at, starting back up here.
But I think the important thing to look at, not to go technical or get into fundamentals of any of these stocks, it's very safe to say that every one of these stocks is overpriced. No ifs, ands, or buts about it. If we were to go to fundamentals, every one of these Magnificent Seven stocks are way overpriced based on fundamental valuations. That's a fact. So do you want to be buying into the market's broad-based indexes or any of the Magnificent Seven? Everybody's always talking about NVIDIA. Oh, I own NVIDIA. Like you're some great stock picker. All you did is conformed and followed everybody else. Oh, I own Apple, or I own Tesla, or I own this. Yeah, you did great. But the name of the game in investing is not how well you did. It's how much money you keep. That's the name of the game. You want to be the best at investing money? Keep what you make. Show me that you know how to not give that gain back. Then I will say you're a good investor. But the average person doesn't. The average person is always chasing the fantasy world. And I don't know what just happened on Instagram, but I just lost my feed. But they're always chasing the fantasy world. They're chasing an unrealistic return. It's called greed. And that's why people lose, because if you get greedy, your money's going to flee you. And that's exactly what we're going to see happen. And I hate to say it. And I'm not trying to say that I want this to happen. I don't know when a recession is going to hit. I know one will. We will go into a recession. We will not soft land this when wheels are falling off airplanes. I mean, the Fed has never, ever been successful. I should say they pulled it off one time, but it was not even worth mentioning. They've never been successful of taking us from a period of high inflation to a period of stable, or their target of 2%, without going into a recession. So you're going to tell me they're going to do it this time. And you're going to tell me that just because Netflix added some subscribers, we're good. And just because the Magnificent Seven stocks performed at 110% over the last whatever period of time they're talking about, that everything's going to be good. Those are all the reasons why everything isn't going to be good. Those are all the reasons why you should take your gains off the table. Those are all the reasons why this should be a point in your history, or your future, or your present, whatever you want to look at it, depending on when you're looking back, when you focused on preserving your principal. The news, everything we can read, all hints to play it safe. That's it. I mean, if you're a risk taker and you know what you're doing and you know how to trade stocks and you know the technical analysis, great, do that. But that's a dangerous time. If any of you are options traders, I used to trade options a lot. I mean, right now the markets are up, they're down, they're up, they're down. And I know one thing about options trading and derivatives: the best market is when you got a solid trend. We don't have a solid trend. One day it's up, the next day it's down, the next day it's sideways, the next day it's up. Like you can't get it right unless you're day trading. That's the only hope you got. And ain't nobody got time for that shit. I'm just telling you. So be very cautious with the markets right now. That's all I can say. We are setting new highs, but that just means there's a lot further for this thing to fall.
Yeah, and we can look at, I mean, look at what's going on in China right now. I mean, I could, this is from CNN here this morning, but, the Chinese stocks have lost $6 trillion in the past 3 years. I mean, they're down 10% this year alone. Just to give you an idea of what China's doing. I mean, right now they're deflating their money and trying to deflate and deleverage at the same time, which is just not sustainable. And right now, this morning, they're actually cutting the reserve requirement ratio for banks and injecting an anticipated $139 billion in liquidity into the markets. Shortly after that announcement, they also have additional rescue measures that were unveiled relating to property loans. As you know, Chris, real estate over there is a disaster. And to give you an idea, November, total cash injections have been 3 trillion won, which is about $400 billion, according to Bloomberg. So desperate times and kind of desperate measures going on over in China. So we could definitely take a kind of a clue from what's going on there. And, how's that going to affect the U.S. markets?
Well, it's interesting, and I want to talk about Spirit Airlines. Zach came in, Zach Kessler, who's a pilot, just picked up some Spirit Airlines, and we were talking about them last week, with their, there was some stuff going on with Spirit and Frontier, and we'll get into that in just a second, but I'm not so sure that it's a good buy. I'm looking at it. It looks like it fell pretty heavily. I mean, listen, maybe you can be a bottom feeder and get it, but I would just not play the long game on anything right now because of just the valuations of the entire market. But, crap, I just lost my train of thought. What was I just mentioning, Stephen?
Well, Spirit Airlines.
Spirit, and then, but we're
talking about China, about the Chinese market.
China. So when you look at some of the economists, I mean, and let's just talk about Ray Dalio, because like if you're going to climb the food chain, like that's who you should be listening to. Ray Dalio, in a lot of his talks a lot about China, and also talks about how China will be the one that kind of brings the rest down, because China's economy is pretty darn big and their markets are suffering severely. Their economy is suffering severely right now. There is going to be a trickle over effect into the US on that. I mean, we're seeing leading indicators, which is logistics and transportation in terms of shipping container costs, be going way down, which hints that we are coming into a slower economic growth period. Everything Ray Dalio talks about, that he's doing it. But when you really think about it, we're so focused because we live in the US on the US economy, and the US economy is pretty resilient right now. It has been. I'm not going to lie. Like, it's been more resilient than I ever dreamed it could have been. But I guess I've never seen the U.S. economy with $5.2 trillion of new money pumped out in the course of a year in filtered through so that's a lot of freaking money. And that money is still finding its way through the system. So even though they raised interest rates, a lot, from 0 to 5.25 to 5.5, its range. So that's a huge increase, but we still haven't seen the impact of those interest rate increases. It's just trickling in. So when you see the markets as high as they are, it's literally a smoke and mirrors. And all the news points to that, because what you're dealing with is the hangover effect of $5.2 trillion, the hangover effect of a long period of time of low interest rates, and the interest rate increases the Fed did haven't really taken effect yet. It's a lagging thing. So when they raise rates, it takes time, 6 to 9 months for that to really be felt. And we can look at any other period of time. And also, people are like with real estate, and real estate's an interesting one. Commercial real estate is down double digits. Syndications and multifamilies, they're down double digits. Some places in this country, they're down 20%. So that could be a bargain for buying multifamilies. But single family homes are up. I mean, literally about 1% up. Like, that shouldn't be when interest rates go up as much as they did. And it's almost 6 to 8%, depending on when you're looking at it for a mortgage. When just a few short years ago, you get a mortgage at 3. Why is real estate still so high? Some people say demand. You know, I say employment is still really good. You know, our unemployment numbers are very low. But all I can tell you is the hangover just hasn't worn off yet. That's all it is. We haven't seen the impact, which is coming. It will hit. We will feel the impact of these increased rates. It just happened very quickly, and it just hasn't made its way through. And I can prove it because in 2008, real quick, Stephen, and then we'll go on to it. In 2008, one of the biggest financial meltdowns in the United States history, period. If you really look at real estate in 2008, when did real estate hit its lows? Was it 2008? Was it 2009, 10? No, it was about 2014 is about when it hit its lows. And depending on where in the country, you could go 12 to 14, but that's a long lag. But that's just what happens. Real estate has a long lagging effect. Stephen, what were you going to say on that?
Well, no, just to your point, I mean, the stock market, it's easy to look at that. We're at all-time highs. Everything looks great. That's not the economy, though. When you look at who owns stocks, like individual stocks, the richest 0.1% own 17% of stocks. The richest 1% own over 50% of stocks. The bottom 50% of the U.S. Income range own less than 1% of the total stocks in this country. So it's not a barometer of the economy overall. It's really more of a barometer of the upper classes. And when you look at it, and it makes, the stock market's made up of the 5,000 richest companies in the world. So there's a big difference there. And we see that dichotomy between the two. It really shows you what's really going on. And like you said, everything lags. So it takes time to start seeing these effects. And by the time that happens, people are already hurting. By the time we start to see this thing come down, and it visually looks like stuff's starting to happen,
Well, I mean, right here in the news, eBay to cut 1,000 jobs, about 9% of its workforce. How's that sound for a growing economy, right? eBay's cutting, Amazon cut way back. I mean, all the companies, banks, if you've been paying attention to Jamie Dimon, which he's changed his tune on a lot of things, JP Morgan Chase did a huge write-off end of last year. I mean, they had record profits so they could absorb it. But, we haven't even really covered this because it hasn't been in the news, but we might as well bring it out before the news even covers it. Like banks, folks, banks aren't done with the troubles. Banks got lots of troubles right now. The Fed kind of band-aided it, with that little thing where they said, okay, we'll advance you money based on your treasuries you hold, and we'll take those as collateral. There's a little bit more to it, but I'm just keeping it simple for everybody. But the regional banks in this country, there's a lot of issues right now. There's major issues. If anyone remembers Silicon Valley Bank, Republic Bank, and all those banks that had issues last year, well, you remember how the FDIC made everybody whole? Even people that had more than $250,000, which is supposed to be the cap for FDIC. Well, they made everybody whole. But what did that do? Well, that drained the FDIC insurance, right? That hurt them. So what the FDIC did, it went out and put big fines, not fines or fees, or increased their insurance premium. I don't know if I'm calling it the right thing for all the banks. So the banks had to pony up a whole bunch of extra money trying to refill the FDIC's coffers so that they were ready if there was some more bank failures. But right now they're not ready. So they're scrambling and they're doing a lot of things. The FDIC is doing a lot of things behind the scenes with banks, not really affecting big commercials because they can handle it because they've had record profits. And make no two ways about it. Look, listen, folks, the one thing that we teach every day, and this afternoon at 1 p.m., we're going to be teaching you the infinite banking concept. We're going back to the basics of infinite banking and how you can be your own bank by creating a private banking system. So banking 101. So when you think of banking 101, let me ask everybody a question, and anyone, TikTok, Instagram, YouTube, Facebook, do you think banks make more money when interest rates are low or when interest rates are high? What do you think, Stephen? Low or high?
Low.
Okay. What's everybody else think? Does anyone else think banks make more money when interest rates are low, or would banks make more money when interest rates are high? Okay. Brian said low. What do we got? Okay. Chase over here on TikTok said high. Facebook said the same. I'm just looking for maybe one more. We got one over here on Instagram saying low. All right. Got a couple on Instagram saying low. So Chase said high. So the answer is high. So when interest rates are high, That's when banks make the most amount of money because their spreads are greater. Just look right now, like how much are you getting on your savings account and how much does the bank lend you money? If you're getting 3% on your savings, okay, and the bank's lending you money at 8%, what's their spread? But then let's go back a few years ago when interest rates were really low, when you were making nothing on your savings, okay, but the bank was charging what, about 3% for a loan? So which one has a bigger spread? When interest rates are high. But not only when interest rates are high, interest rates, when they're high, banks can kind of go high. They can charge more for loans. So banks make a significant amount of money when interest rates are high. So the answer is high. So in private banking, do you think you can make more money when interest rates are high or when interest rates are low? Same thing. If you're going to mimic a bank, the rules are the same, high. When interest rates are high, this is the time when banking flourishes because your spreads go up. You can charge more. You can make more money. Like everything we do with Private Money Club right now, what are the average loans going for in the private lending world? 12 to 15%. We're seeing 15% every day on Private Money Club. Gosh, Stephen, I remember just a few short years ago, we were talking 9%, and that was a good rate. Like 9 was like, whoa, we're 15 now. 15, almost double where we were just a few short years ago. So who's making the money? Anybody in the banking business, which is exactly why that's what we teach. We teach everybody how to be the bank because that's the ultimate. You want the ultimate hedge. You want the ultimate knowledge. You want that? It's banking, folks. Be the bank. But anyway, get off my little, hi-hat there. It's just when you're looking at all this stuff and you're looking at the banks are making a lot of money, but the commercials are. And the regionals are getting squeezed. And I'm going to just kind of go a little conspiracy theory here. I think the Fed is trying to squeeze out small banks. I think they're trying to take the small regional banks and the more local banks and squeeze them out and make it almost impossible for them to either hit their required guidelines by FDIC, which right now 700 banks are outside of the guideline for FDIC. It's a lot of banks, which means 700 banks got to get in order, get their reserves in order, or they got some issues. So there's going to be more carnage in the banking industry. Mark my words. Through 2024 and 2025, you will see more banks fail. No ifs, ands, or buts about it. They'll either be gobbled up by the big commercials. They'll just be left to kind of fall. It's going to happen. And that is not going to be good for any of us at all. Well, I don't know, Stephen, it'd actually probably be pretty good for us being our own bank, wouldn't it?
I think so.
So some of you are probably like, well, what's the point of all this? So the point is a couple things. Back to what Stephen said earlier. This is the time where you want to preserve and protect your wealth. You get paid right now a significant interest rate on safe money. Treasury bonds, treasury bills, whole life policies, the interest rates you get on those, all very, very favorable interest rates you can earn on your safe, guaranteed money right now that didn't exist a few short years ago. Whole life policies for all the mutually owned insurance companies that we deal with, all of them are raising dividends. Why? Interest rates are up. So we're getting raises for the first time in over 20 years on our whole life policies because we've been in a downward cycle in interest rates. Now we're on the upside of cycle. Okay, interest rates are going up. Contrary to what the Fed says, we might lower rates 3 times, in 2024. And they probably will, but it'll probably be in light of a weakening economy because we already know that's coming. So by dropping rates, they can kind of hopefully keep the economy at least stimulated by a little bit cheaper money and soften the blow for what we call the commercial debt cliff, which is all the commercial loans that are out there and all these commercial buildings that all mature 5, 7, or 10 years. We're all maturing. And when they mature, the price doubles. I mean, think about it. These mortgages and some of these loans were done at 3%. They're going to go to 7, 8%. I mean, that's going to be a big hit. So the Fed's trying to get ahead of that. And the Fed is usually pretty good at doing that. But I have zero confidence the Fed can soft land this. Hopefully I'm wrong.
Yeah, quick update to the story earlier. We were talking about Boeing, and kind of a couple people in the comments were asking, was that due to Boeing, installing stuff wrong? Is it due to bad, maintenance on the planes, or what that looks like? So a story just came out an hour ago from Seattle Times saying that Boeing, not the airline, misinstalled the piece that blew off that Alaska Max airline last week. So they are saying it was a Boeing mechanic that messed that up. And so just kind of
probably rushing to make sure he's out by 4:30. Didn't want to stay till 5.
And and this was actually a few days ago down in Miami. I forgot about this. This was a Boeing 747. This was all over Instagram just because I follow Miami news down here. But if you see this, you
Yeah.
see flames shooting out of it. I don't know if you guys saw that or not, but
Holy crap.
the plane took off from Miami International and a flames just shooting out of it. So they had to turn around and land back in Miami. So you can see right there what they did. But there was tons of videos all over Instagram, different angles of that plane, which is flames shooting out of it, which would be a nightmare situation. So more Boeing issues right there, just to give you an idea.
Wow.
One other quick update from earlier, you were saying, Chris, how you were talking about how the price gets, kind of baked into a lot of this stuff. Well, it's exactly what they're saying for Netflix. Dutch Bank downgrades Netflix, says all the good news is priced into the stock already. So just exactly
they shouldn't just downgrade Netflix. They should downgrade all the Magnificent Sevens, because that beautiful, magnificent speculation is built into the price of all of them as well. I was talking to a guy the other day who's got Apple, and he's done very well. And Apple's a great company, huge company, probably one of the most financially secure. But, we were just talking. He's like, yeah, I think I'm going to sell my Apple stock. I've made so much money, and, it hasn't really been doing too much lately. I said, yeah, you should take your gains off the table. You got to know when to hold them and when to fold them. So I got something interesting, Stephen. And sometimes I truly believe our computers are listening. Because, earlier we were talking about, who should we be taking stock advice from? I mean, should we hire a financial advisor, a CFP, a CFA? Should people be listening to us on, like what we're doing with our money, with treasury bonds and especially designed whole life and private lending? Listen, I got the best answer for you. Here's the golden goose, and it's in the news. It just popped up. She just popped up. Nancy Pelosi. Let me read you. In today's news, 1 hour ago, Nancy Pelosi made $500,000 from her NVIDIA bet, doubling her annual government salary in just 2 months. Dude, she's freaking good. We did a whole episode talking about how congressmen and women in the House and, anybody in politics, essentially, they're the best stock pickers there are. Like, I don't even know why in today's world we need financial advisors. Like, why do you even need anybody to tell you what to invest your money in? Just watch Nancy. Like, she just made 500 grand. So all we should have done is just figured a way to track when she bought NVIDIA, and we just follow along. We just copycat her and buy NVIDIA when she does. And when she sells it, we sell it. There's got to be a way to do that, isn't there? And if there's not, can someone please figure that out? You want to solve a really big problem? That's a problem to solve. I couldn't believe it, Stephen. Like, it literally wasn't here earlier when we were doing this show. And there she was. Her pretty face pops right up on my screen. Man, she did it again. Good for her. She can buy more of that fancy ice cream.
I believe there are some stock trackers.
Oh,
there's definitely one. X has everything these days. Elon Musk, I saw, was over in Poland at some of the concentration camps from World War II. He's at Auschwitz and some other places over the weekend. Interesting I listened to a little bit of an interview that he gave while he was over there, and just amazing what humans are capable of on both sides of the spectrum. I mean, you look at people like, we opened up the conversation today talking about Tony Robbins, and, you mentioned Ray Dalio, and you mentioned Jamie Dimon, and, just some of these people that, Warren Buffett, that are just incredible minds and incredible people. I mean, I would put Elon Musk in that pile of individuals that are just unbelievable. And then you look at the other side of humanity, of, what went on in World War II with the Nazis and the concentration camps. And I mean, there's, over there, there's hundreds of thousands of suitcases piled up still from where people went into these places thinking they were just being relocated, and they got there and went into gas chambers and firing squads, and just unbelievable. Like, nobody thinks anything's possible until it actually happens. But it really just opens your eyes to, not only the downside, but also when for every, reaction, there's an equal and opposite reaction. And I believe that in human beings too. For every evil, unbelievably, person that's just brainwashed on that side, there's people on the other side of the spectrum. And all of us have choices, and all of us wake up every day with, what do we listen to? What do we put into our minds? Are we just mindlessly scrolling and looking at the news? Are we trying to purposely inject stuff into our minds? And I truly believe that directs, the way that your life goes. And when you see things, like someone like Elon Musk over visiting something like Auschwitz, it just really shows you that spectrum of what humanity and what the world is possible. So I don't know where that rant is going. It's just things like that just really are mind blowing to me, Chris.
Well, I want to go to a couple of the comments that are coming in. We got some really good ones. We got people talking about how they like credit unions. I love credit unions.
While you're doing that, I'll scroll through some of Nancy's trades. Go ahead.
Yeah. So let's pull. Yeah, so we'll look at what Nancy's buying or selling, and give you guys some really great stock tips. Even though we can't give investment advice, Nancy Pelosi clearly can. So we'll just show you what she's buying. But Andrew, I don't want to butcher the last name, but Andrew Hansen Bielk, I'm going to take a stop. Coming in from Facebook, made a good point, said, he's doing the math when I was talking about banks make more in low interest rate markets or high interest rate markets. And I said high, and that's a fact. But he called it out, and he said 3 to 8% is a 5-point spread, but it's only 2.5 times. So 2.5x. 5 to 5% is a 4.5% spread, but 10x return. Low rates pay more, and he's got question marks. So how you're doing that, yeah, I totally understand it. You're kind of just playing the numbers, but it's just math, right? If the spread is 5, if they're making a 5-point spread and they're doing that on the same dollars, they're making more money, regardless of how many, is it 2.5x or 5x or 4, or 10x. So when you're really thinking about it, it's just the math. You just got to do the math on it. So the higher interest rate, the more banks make, which is you can just look at all the profits they just reported. JP Morgan, Wells Fargo, all of them reported they all had blockbuster profits, and that was because of high interest rates. And that's always that way. There was another really good one here that, let's see, Dawn was asking, what's the difference between T-bills, treasury bills, and treasury bonds? It's simple. A T-bill is
Chris, while you're getting into that real fast, Neela was also asking, like, where and how do you buy those? So I'm just going to pull up. The government makes it real easy. It's treasurydirect.org. So while you're explaining, I'm just going to pull that up so they can see this.
So a T-bill would be anything a year or less in duration. So I'll give you an example. Like, let's just say you bought a 3-month T-bill. You're gonna basically essentially think of it as you're lending the government money, okay, for 3 months, and the government's going to pay you interest for that period of time. But after the 3 months, the bond or the note comes due, and the government gives you your money back after 3 months. So that's a 3-month. So anything under 1 year would be considered a treasury bill. Anything over 1 year would be a treasury bond because it's longer duration. And they come in different durations: 2 years, 10 years, 30 years. So you can do them that. And there's a whole bunch in between there. But to buy them, Stephen's got the site up right here. It's just treasurydirect.gov. If you want to buy the bonds direct from the United States government, which I don't always think is the best thing to do. Okay, unless you're really going to track it and you're going to ladder the bonds and know what you're doing. Another simple cheat would just be to find a good like ETF. This isn't a recommendation, but the ones I buy ZROS, which is a 30-year zero coupon bond. Okay, treasury bond, which means I get paid no interest, but I benefit the most from price fluctuation based on interest rates going up or down. And another one is TLT, which is a 20+ year. So it's a combination of 10 and 30-year treasuries, which averages out to about 25-year. I've been buying that one, and I like it because it's a big ETF. It's very liquid, and I get both. I get interest plus the appreciation in price. And you can see the chart here. So I've been buying that whole cycle down. See where you see it all going down? I bought the entire cycle down. I've been buying treasury bonds now for over a year, talking about them for over a year. And then we had a big spike up. That was when the Fed came out and said, hey, we're opening the door for 3 rate decreases. The TLT shot up, so did ZROS, because there was anticipation, speculation that rates could go down. And if rates go down, the price of your bonds goes up. Remember, if interest rates go down, the price of the bonds go up. Okay. If interest rates go up, the price of the bonds goes down, which is what I've been doing. I've been buying low and dollar cost averaging in as interest rates went up, so that then when interest rates go down, I make, I'll swear a little bit, a shit ton of money. and it is just mathematics. I don't even need to be smart. I don't need to look at fundamentals. I don't need to say, oh, these are overpriced or underpriced. I just know I bought low because interest rates were high. It's almost a cheat. It's so simple. So great question. Hopefully that helps Dawn. Let's see, what other ones do we got? There's another one. Her pretty. Oh yes, her pretty face. I think you're referring to Nancy Pelosi. Looks like Esma from Emperor's New Grove. I haven't seen that one yet, but I'll have to check that out. Let's see. Believe the perspective also. Nagy, keep aware. History repeat. Yeah, history will repeat itself. So, what about the FEMA camps? Oh yeah. Jeez, I'm not even going to touch that one yet. I'd rather piss everybody off by talking about how Mr. Donald Trump just swept the New Hampshire primaries. That should piss some people off, but also make some of us happy. It's a pretty interesting dynamic. I told you the last two things, me and Stephen said, we're going to start talking politics. We get more views, we get more haters. It's great, but it's going to be an interesting, very dynamic year with what's going on. And, we're right off to the races here. You got Trump in court, got everything thrown at him, but the kitchen sink, actually, no, they threw the kitchen sink at him already. They did. Yeah. They did throw the kitchen sink. I forgot about that. So they got everything thrown at them, but yet you've got, you got other Republican candidates for presidency bowing out and vowing to support Trump. And I thought the other day, Stephen, wasn't there an article that he picked as vice president, or was that just is that just more?
No, he actually got, supposedly he's got maybe like a top 3 list going right now, but nothing's confirmed. We'll see what route he goes. There's different speculation on, is he going to make the pick, to try and get a certain part of the base, like, in 2016 when he picked Mike Pence, a lot of that was to kind of get that, evangelical, like conservative Christian vote. I've heard on the short list is JD Vance up in Ohio, which say wouldn't help him a lot as far as additional votes, just because Ohio is pretty red as it is. And, we've heard Carrie Lake, she's a little just like Trump, a female Trump pretty much. So it's like, what is she really going to be able to bring in?
I don't know if we need a female Trump.
There's been talking Nikki Haley. But they've been getting a little dirty over the last week, which doesn't seem to matter because Trump and DeSantis had one of the hardest bashing back and forth, during the campaign. And
I feel like that was intentional, though. I almost feel like that was like intentional.
Of course, it's politics, but as soon as he does bow out, they both love each other and are giving each other hugs and kisses. So that's even though they're head and nose, but Nikki Haley last night was the New Hampshire primaries. Obviously, Trump and Haley are the only two now in the race. Trump blew her out, and it was kind of you look at the data, over 90% or over 70% of the votes that Haley got were from non-Republicans. New Hampshire is an open primary state, meaning anybody can vote for the candidates. So there's a lot of like effery going on there, so to say. So, Trump is barring a catastrophic event or, something, unforeseen, like a death or something of that nature, Trump looks like he'll be the nominee. On the other side of the fence, the dude just seems to continue declining every day. His policies are just terrible. I mean, you look at the southern border and what's going on there. The Supreme Court, ruled this week that Texas does not have the right to block the federal border agents from, coming in and basically opening the border and allowing, people just to flow through. So, we're seeing Texas and the federal government continuing to fight. That policy is just an absolute disaster, though. And it's just, it's going to become a very, very dirty 2024 very quickly here. So just be ready.
But I mean, it's like, listen, how many years or decades have we talked about, it's just a matter of time before Texas becomes its own country. I mean, and like, this is some trying times. I mean, maybe this will be the history books in the future. Like, because I don't know, it's just going to be interesting. And, somebody, Morgan said, how do we feel about Vivek as vice president? I'm not a huge political guy, so I'm not, I have who I vote for, and that's the freedoms I get by living in the United States of America. I get to vote for who I want, and I do. And my wife, however, she went to school for politics. She actually, as funny as this is, when Arnold, this is way back in the day, when Arnold ran, she was on that campaign. So my wife used to be Democrat. She's now Republican, or actually I would say she's really in the middle. She's very in the middle. She looks at both sides equally, but then also has strong opinions about certain aspects, which I think you all can understand when it comes to the dude, why my wife has strong opinions there. But she loves Vivek. She's been talking about him a lot. She thinks he's a little young, to be a president, but as a vice president, she thinks he would be really good. That's just my wife. So I'm going to say my wife's smarter than I am when it comes to politics. And she definitely has followed Vivek quite extensively.
I like the guy. I'd fully support a VP.
100%. 100%.
Personal.
And then somebody over here on TikTok brought up, and we haven't really talked about him a lot, but I think it's definitely worthy of bringing it up, is what do we think about Robert K. Jr.? Love the guy. Absolutely. He was on the Democrat side and then kind of went independent, which I think is a unique play. Do I think he could win? I don't. But do I think he could take votes from, I don't know who's even running for the Democratic seat. I mean, it's still early. I know the dude is, or maybe not, or is it even the dude, or does he know if he's running yet? Just asking for a friend.
The dude's running. I mean, probably his closest competition would be Dean Phillips, who I think he primaried okay last night. I didn't look at the actual final results last night because it's kind of weird because Joe Biden, as the incumbent, is not on the primary on the Democratic side, so they had to write him in. So it's hard to gauge, but there's some big Democratic donors that are kind of backing Dean Phillips right now. I don't honestly know a lot about him.
So it's always funny as we talk politics. Look at our numbers, man. Look at the numbers skyrocket the second we talk about it, and people come in. I just love it, and I'm going to play into it this year. I don't care how much I piss people off on this show. We are going to play this card because, number one, it's fun. Number two, it's going to be all over the news. So it's going to be easy content. And number three, we get to piss some people off. That's all there is to it. And, let's see, the dude, Trump, positive for Vivek. Also independently wealthy. Yeah, exactly. Like his family, there's an interesting story. And I actually just read an article about, kind of his upbringing in his family, and very independently wealthy. So, and also too, I think that's another thing you really look at is who's wagging the tail, or is that the way you say it, Stephen? Who's wagging the tail of each of these candidates? And, I think we kind of know Trump, and we've kind of got a taste of that. We definitely know who's wagging the dude's tail, or maybe we don't. But, Vivek, you like to think that, he's not going to waver to any of the special interest groups. And I think that will hold true. And going to be a hell of a year. And all the more power to Robert K. Jr. I mean, I've always been a fan of the Kennedy family, read lots of stuff about them. And I think he's definitely got a good presence for this presidential election. I just don't know if an independent can take it, especially with the steam that, the Republicans have going on right now. It's kind of going to be interesting. But could the Democrats pull out Michelle Obama? I mean, could that one come out? I don't know. It'd be like a late Christmas present for some of those Democrats, I believe. I don't know. What do you think, Stephen?
Yeah. We'll see what happens, man. I don't know. I did see an interesting story. So
it's Obama. He said itself.
What do you think of Ron Paul? What do you guys think of Ron Paul and his son Rand Paul? I mean,
I don't know. I mean,
personally, I'm a fan.
What does everybody else think?
But while we're kind of hearing, so if you get a chance, read a little blurb that the Ron Paul put out. Let's see, yesterday, and it's titled "Don't Tax the Rich and the Fed," and it's maybe 6-7 paragraphs. And just talks about, I'll just hit the beginning of it, Chris. So select politicians, government officials, economic elites, and experts arriving at the annual World Economic Forum meeting in Davos, Switzerland, were greeted with an open letter signed by more than 250 billionaires and millionaires. The signers request their respective governments raise their taxes. The letter signers are concerned about inequality that they say has reached a tipping point. The cost of this inequality to our economic, societal, and ecological stability risk, the letter continues, is severe and growing every day. They may have a point. Since the 2008 market meltdown, resentment against those at the top of the income ladder has been growing. However, this is not because people are envious of those able to profit in a free market. Rather, the resentment is rooted in the corporatist system that rewards those who manipulate the political process. If the signatories to the letter want to truly end the type of inequality that fuels populist rage, they should stop calling for tax increases and instead call for an end to the government programs and policies that benefit the rich and powerful. Included are programs like Export-Import Bank that subsidize large corporations, health and safety regulations that cartelize markets while failing to protect consumers, an interventionist foreign policy that enriches the military-industrial complex while making the rest of us poorer and more vulnerable to terrorist attacks. The Federal Reserve is the leading cause of inequality. This is not surprising, considering it was created at the behest of bankers and rushed through Congress just before Christmas when few Americans were paying attention. Many Americans became aware of how the central bank tailors its policies to benefit the financial elites during the following the 2008 financial meltdown. Then the U.S. government, enabled by Fed money printing, bailed out large financial institutions while average Americans suffered. So just a little bit more. The Fed had been helping big firms for many years. In the 1990s, it was common for the Federal Reserve, then under leadership of Alan Greenspan, to pump money into the market in response to apparent crises. This was named the Greenspan put by the financial press. The new money would help some companies and their wealthy owners while reducing most Americans' purchasing power. And Chris, they do now still call it the Fed put. You can look that up. Middle and working class Americans suffer the brunt of inflation, which is properly defined as the central bank pumping money into the economy, thus reducing the dollar's purchasing power. In a free market, most people will be able to have a satisfactory standard of living and recognize that the super rich earn their fortunes by offering goods and services that serve the needs and wants of consumers while providing good jobs at good wages to fellow citizens. In contrast, in a mixed economy supported by a fiat money system, the average person will suffer a steady erosion of his standard of living thanks to the central bank's inflationary policies while the crony capitalists prosper. This is a recipe for social instability. Those concerned with the detrimental effects of rising resentment of income inequality should support repealing all federal programs that reward crony capitalists, including programs masquerading as providing national defense. They should also work to audit and then end the Fed. So there you
Audit
go.
and end the Fed. I love that. Hey, listen, like you can all see what's happened to the dollar. I mean, it's been eroded. It's been eroded by exactly what you just said. There was a lot of words, but I mean, if you look at $100 bill and you go back to 1913 and you trace it through and you look at the value of that 100 from then till now, it's been eroded to almost nothing. And that's all inflationary. That's exactly what they do. They're just devaluing dollars, but yet they fully control all monetary policy, and they're not a government institution. They are a private institution owned by the largest bankers or largest families, including, I think, Satan. I think he sits on the board. He is definitely present in the Fed, but abolish the Fed. Yes, Kathy. So, when it comes down to it, with WTF, it's going to be an interesting year here. We're going to definitely cover all the stuff. We're going to go way off the beaten path because, hey, sometimes that's where the truth lies. And we are definitely going to be covering the political side of this because why the hell not? Let's do it. Stephen, anything you got to say about this day or this WTF as we wrap?
I'm ready for it, man. I'm here for it. And the good news is we take all of this and we roll it up into a nice little pretty webinar at 1 p.m. Eastern every Wednesday following the show at 1 o'clock Eastern, where we're going to show you how to take, what we're learning about the economy and what's going on in the world and how we can take that and prosper from it and succeed with it and reach our goals and provide for our families and provide a better life. And at the end of the day, that's what it's all about. So thanks for listening. Thanks for being here. Take us home, Chris.
Awesome. Well, with that being said, folks, we'll see you guys all at 1 p.m. Eastern this afternoon. If you don't know how to register, it's easy. You just go to chrisnaugle.com and register for the wealth webinar, or jump onto my YouTube channel at The Chris Naugle. Make sure you subscribe and click the little bell, because we'll be streaming on YouTube as well. And today we're going to bring it back to the basics of the infinite banking concept, showing you all what that means to take back control of your money by being the bank. We'll see you all at 1 p.m. Until then, go WTF.